Right now, while you're watching this, someone in the UK has just lost their job. And in the next minute, dozens more will face the same fate. But here's the part that will really grab you. This wave of layoffs is only going to get worse. And I have the numbers to prove it. Numbers the government would rather keep hidden. In March 2025, 70,000 jobs vanished. That's 70,000 British workers walking home to break the news their families never wanted to hear. All in just 30 days. And if that shocks you, brace yourself. Because the worst hasn't even hit yet. I'm going to show you exactly what's coming, why almost no media is connecting the dots, and most importantly, what it means for your job, your paycheck, and your future. Stick with me, because the twist in this story is something you cannot ignore. Let's rewind to early April 6th, to be exact. That's when UK businesses were hit with what feels like a financial sledgehammer. Two massive changes landed on the exact same day, and the impact is brutal. First, employer national insurance contributions jumped from 13.8% to 15%. You might think, just over 1%, how bad can that be? But here's the kicker. The threshold for paying this tax didn't just move slightly, it was slashed from £9,100 down to £5,000. Think about that. Companies now pay the higher rate on a far bigger slice of every employee's salary. This isn't just a rate increase. It's a rate increase applied to much more money. And that's not all. Minimum wage hikes landed on the same day. The standard minimum wage rose 7%. Young workers aged 18 to 20 saw their pay jump 16%, hitting £10 per hour. Workers under 18 experienced an 18% increase, reaching £7.55. Now, here's where the math starts to hurt. These numbers aren't just statistics. They explain everything that's about to unfold in the job market. Take an 18 to 20-year-old working a normal 35-hour week at the new £10 minimum wage. That adds up to £18,200 a year. Last year, an employer would have paid £918 in national insurance on that salary. From April onward, that same bill jumps to £1,980. More than doubled. Not a small rise, literally more than double. Now, combine that 16% wage increase with the doubled national insurance, and suddenly hiring that young worker costs a business 22% more. Overnight. Nearly a quarter extra. And here's where it gets grim. Think about who hires lots of young workers. Pubs, restaurants, hotels, coffee shops, the hospitality sector. These businesses already run on razor-thin margins, and now their wage bills just shot up by over a fifth. Remember the 70,000 jobs lost in March? Terrifyingly, that was before any of these increases even kicked in. Before higher wages, before doubled national insurance, businesses were already bracing for impact. The hospitality sector took the first hit, and the damage is staggering. In March alone, accommodation and food services cut 92,000 jobs. 92,000 people. Almost 1% of that entire workforce gone in a single month. Experts estimate the sector faces £3.4 billion in extra costs. Billion, with a B. These aren't abstract numbers. They are pubs shutting for good, restaurants cutting staff to bare minimum, hotels letting go of loyal employees. And it gets worse. Because apparently, the government decided hospitality hadn't suffered enough. Business rates relief, which protected these venues since the pandemic, has been slashed. During lockdowns, pubs and restaurants paid nothing, while other businesses kept paying full rates. Then relief gradually fell to 75%, just a quarter of normal rates. From April, it dropped further to 40%. That means business rates more than doubled at the exact same moment wage costs jumped 22%. It's almost like the system was engineered to crush these businesses. And we're already seeing the fallout. Hospitality job vacancies have collapsed, dropping from 94,000 before the budget announcement to just 79,000 by May. That's a 19% year-on-year decline. Businesses aren't just laying off staff, they're refusing to fill positions when people leave. The sector is shrinking before our eyes. What's even more alarming is how the media is handling this. Headlines barely blinked. 70,000 jobs lost. A minor 0.2% dip. Nothing to worry about, they say. But if you dig into the numbers, which most journalists didn't bother to do, you find the real story. The health and social care sector added exactly 70,000 jobs in March, the same number that disappeared overall. So where are these jobs really going? The truth. The private sector, the part of the economy that actually earns money and survives on profit, is bleeding jobs fast. Meanwhile, government-backed sectors, education, healthcare, public administration, are untouched, even growing. Look at the breakdown. Accommodation and food services fell 0.8% in 1 month. Most private industries down around 0.4%. Government jobs hide the damage, making the overall numbers look just bad instead of catastrophic. It's like checking a burning building's temperature by including the ice from the freezer. Across the economy, vacancies have crashed to 717,000, the lowest in 7 years outside the pandemic. That's far below 2018 and 2019 levels. Despite population growth, companies are firing staff and refusing to hire replacements. And this isn't a short-term blip. For 39 consecutive quarters, job vacancies have shrunk compared to the previous period. That's nearly a decade of steady decline. Redundancy filings tell the immediate story. Firms planning major layoffs submit forms to the government's redundancy payment service. In March, filings jumped from 20,000 to 29,000, a 50% increase. And remember, this only counts large planned redundancies, not the countless smaller layoffs quietly happening across the country. Most job losses at small and medium businesses don't even appear in official statistics. The real situation is far worse. And there's one crisis barely mentioned in political debates that should alarm anyone who cares about the country's future. Young people are being shut out of the job market at levels unseen in decades. Youth unemployment for those aged 18 to 24 has surged to 14.5%. Compare that to workers over 50, where unemployment sits at just 2.1%. Older workers are almost fully employed, while young people face rates 7 times higher. Right now, 948,000 young Britons aged 16 to 24 are not in education, employment, or training. Nearly 1 million young people have nothing. No job, no skills development, no clear path forward. Even more worrying, 22% of these unemployed young people have been out of work for over a year. They're not just between jobs, they're sliding into long-term unemployment, losing months, even years, of valuable experience needed to build a career. Now, think about this. Why would a business take a chance on a young person with no experience when hiring costs for them just doubled overnight? Why train an 18-year-old when you could hire someone with 10 years of experience for almost the same cost? The answer is simple. They won't. And they aren't. This brings us to one of the most damaging economic policies quietly celebrated as progressive: the extreme compression of wages between the bottom and middle of the income ladder. The median wage in the UK, where half of workers earn more and half earn less, is around £35,000 per year. The minimum wage for a full-time worker is about £25,400. That means the difference between the lowest legal pay and the typical British worker is just £9,600, only 40% more than the bare minimum. This is historically unprecedented. The wage range is so squeezed that entry-level jobs and positions requiring years of experience are barely distinguishable in pay. 25 years ago, someone in a basic job could cover bills, buy food, maybe even afford a cheap holiday in Spain. Today, pay slips look bigger, but real life is harder. Bills have soared, food costs have skyrocketed, and purchasing power has barely improved. Meanwhile, someone who's worked 15 years, put in extra hours, skipped family time, worked evenings and weekends, climbed the ladder to become a manager. They're now earning barely more than someone who started last month. What's the point of pushing yourself? Why sacrifice your personal life and mental health when the financial reward is almost meaningless? The policy does the exact opposite of its stated goal. Instead of helping low-wage workers rise, it traps everyone in a compressed wage band. It leaves most British workers poorer in real terms while simultaneously destroying the entry-level jobs that young people desperately need. And here's where it turns into a self-reinforcing disaster. Companies are firing faster than they're hiring. The unemployment-to-vacancy ratio, the number of unemployed people competing for each job, has jumped from 1.7 to 2.4 in just 1 year. That means for every single job opening, 2.4 people are now fighting for it, up from 1.7 a year ago. Competition is brutal. When someone loses their job, they stay unemployed longer. There simply aren't enough openings to absorb the displaced workers. This sets off a vicious cycle. Workers lose their jobs. They can't find new ones quickly. Unemployment rises. Consumer spending drops because unemployed people spend less. Businesses sell less and cut even more staff. The cycle accelerates, and we're watching it unfold in real time. The April tax increases have only just started to hit. And here's where it gets really confusing. According to official GDP reports, the UK economy is supposedly booming. GDP allegedly grew 0.5% in February alone, bringing total growth to 1% since October. Every sector is reported as growing, even accommodation and food services. The very sector that cut 92,000 jobs in a month supposedly grew 0.4% in the latest data. Does any of this make sense? How can an industry grow output while simultaneously shedding nearly 1% of its workforce? How can GDP surge while job vacancies sink to 7-year lows? How can the economy thrive while companies plan redundancies 50% higher than months ago? The numbers simply don't add up. Either the employment numbers are wrong, or the GDP figures are wrong, or the way these statistics are calculated has become so detached from reality that they're measuring something entirely different from what ordinary people experience. The contradictions are everywhere. Official data shows growth and economic strength. Meanwhile, real businesses are closing, real workers are losing jobs, young people can't find opportunities, and wages are being squeezed so tightly that career progression barely exists. Something is deeply broken in how economic health is measured, or at least in how it's presented to the public. So where does this leave us? We're staring down a crisis that almost nobody in power wants to acknowledge. Youth unemployment is creating a lost generation. Wage compression is destroying incentives to advance. The hospitality sector is being taxed into collapse. Private businesses are shedding jobs while public sector employment remains untouched. Job vacancies are at multi-year lows, yet unemployment keeps climbing. And all of this is happening supposedly during a booming economy. The full impact of April's changes hasn't even been felt yet. Many businesses are still figuring out what these cost increases mean for their survival. When the May deadlines hit and employers actually pay the higher national insurance, reality will hit hard. Headlines in the coming months will likely be brutal as more businesses reach breaking point. Policies designed to help workers are having the opposite effect, destroying jobs, eliminating entry-level opportunities, and making it harder for anyone to get ahead. This is the employment catastrophe nobody in power is willing to discuss. The data is right there for anyone willing to look beyond the headlines. Those 70,000 jobs lost in March? That was just the beginning. The real storm is still building. When it hits, millions of British workers and businesses will feel the impact. The real question isn't whether it will get worse. It's how much worse it will get before anyone with the power to act actually does. And right now, that question remains terrifyingly unanswered. If you want to stay ahead of these economic shifts and see the truth behind the headlines, subscribe to UK Economy Explained. We're committed to bringing you the real economic news that affects your job, your paycheck, and your future.